Hello, mic test. Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be the Monday, the 22nd of September 2025, a brand new week ahead. So before we kickstart today's Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into today's full suite of daily dose that includes all the broad-based cross-asset classes intraday technical outlook, let's have a quick recap what has taken shape on last Friday, and as well as in today's early Asia session, if there's any particular interesting news flow and economic data that I'd like to share with you guys. So last Friday, let's start with last Friday first, all right? So last Friday, the key risk event will be the meetup between US President Trump and Xi, telephone meetup, not a face-to-face meetup. So yes, on Friday, Trump and Xi has a phone call. So apparently after that phone call, Trump actually tweeted over his social media post saying that China has kind of approved that TikTok deal. So this TikTok deal is ongoing, is now actually unfolding much more greater detail, where Trump extended the deadline until December this year. So initially it was actually due to expired in last week. If it's being expired, TikTok will be forced to actually fold its operation in the US and shift back into China. And this TikTok deal is very important. Why? Because it includes a broader based package that this ongoing trade negotiation, trade deal talks with US and China that is still eyeing out various differences. So given that this TikTok deal has been approved, there could be much more potential positive outcome coming up from this ongoing US-China trade deal negotiation, where we know that right now the trade tariffs, we call it pause, has been extended until towards November this year. That is the third extension. All right, and what's important over here is that during that phone call, Chinese presidency also urged Trump to avoid restrictive trade measure and to not undermine progress made in earlier talks. That means that's the earlier trade talks a couple of months ago between the US and Chinese negotiator that is aimed at easing tension between their two economies. And what's most important over here is that this rather conducive telephone call between Xi and Trump opened up the pathway towards their very long and highly anticipated face-to-face meeting on the sidelines in this upcoming APEC, which is Asia Pacific Economic Conference Summit in South Korea, that will be held at the end of next month, towards the end of October. So US President Trump tweeted that he will meet Chinese President Xi Jinping on the sideline of the upcoming Asia Pacific Economic Cooperation Summit. So that actually kickstarted another round or another extension of a positive feedback look into the US stock market on last Friday, where we start to see fresh all-time high again on the Nasdaq 100 and the S&P 500, led by those mega cap stocks. So you see the performance of the S&P 500, so pretty much positive, up by 0.5%. So the market leader was the market cap centric technology stocks. Nasdaq 100 up by 0.7%. The Dow Jones up modestly by 0.4%. Hasn't made a fresh all-time high after last week all-time high, but still inching within its bullish trend. Later I'll share with you on the short-term intraday technical outlook. The Russell 2000 we still record that on Thursday. It finally made a fresh all-time high after 2 years of rangy configuration. But usually after a fresh all-time high, most of this kind of benchmark stock indices tends to do a pullback. So the Russell 2000 did a pullback on last Friday, which is allow it to actually stage a corrective decline of negative 0.8%, making it the underperformer on last Friday. So if you look at the heat map of the S&P 500 over here, so last Friday is being led by the mega cap technology stocks, which is Microsoft, Apple, and as well as Google, followed by Tesla. All right, so Microsoft up by 1.9%, Apple 3.2%, Google 1. Google, which is the parent company of the ticker code is called Google. So the stock name is called Alphabet. It's quite strange. Up by 1.15%. So nevertheless, when I talk about Google, it means Alphabet over here. And Tesla up by 2.21%. Some modest gain in the AI juggernaut, Nvidia up by 0.24%. All this basking on the limelight of a potential positive breakthrough between China and US that potentially lead to a up and coming and highly anticipated face-to-face meeting between the two leaders at the end of October on the sideline of this APEC summit that to be held in South Korea. Then over to the FX market. So over the FX market, I did warn that on Thursday that and on Friday potentially we could see an unwinding of the net short position in the US dollar. So recall that the dollar was very weak ahead of the highly anticipated FOMC meeting and Fed Chair press conference last Wednesday. And after Fed Chair delivered a less dovish press conference speech where he did mention that he's still going to take meeting by meeting basis. So that actually causes the dollar strength to revive since last Wednesday exposed FOMC meeting and press conference. So what we could see is that the dollar continues to strengthen on last Friday. Okay, this is the 5-day rolling performance against the dollar against other major currency as of 22nd of September. We are speaking right now. So if we go back down to the 1-day rolling performance, only taking into account of the start of today's Asia session, we also start to see a broad-based dollar rebound that is taking shape, where the dollar is strengthening the most against the Swiss franc and against the dollar yen, which is up by 0.3% now, and against the Swiss franc is up by 0.2% based on a 1-day rolling performance basis. Above the dollar index 1-day rolling basis right now as we're speaking 0.15%. And what's interesting over here is that the dollar index on Friday managed to close right exactly above the 97.3 key long-term circular support level. So it managed to close up a bit. That means it didn't have a weekly close below after that intra-day breakdown on Monday, on Tuesday, 16th of September, ahead of the FOMC meeting on the 17th of September. So if you look at the weekly chart over here, it managed to form a bullish weekly dragonfly doji candlestick right above this 90s after in daily breakdown, but it cannot have a weekly breakdown below 97.3. And why this 97.3 is important, like I mentioned earlier on the monthly chart, this 97.3 is indeed the lower boundary support of this long-term ascending channel that I drew from the low of May 2011. So right now, last week, given that pivotal week was the FOMC meeting, it didn't manage to have a weekly close below it. So right now, the only days to go by will be a monthly close. Where will it close monthly? So in this close monthly, it will be less than 10 days. So the end of this month will be on the 30th of September, which is on the Tuesday, next Tuesday. So by next Tuesday or after next Tuesday, it did manage to close below 97.3. That means potentially we may see another round of choppy movement in the FX market over here. Okay, so there are also a couple of key events this week that could actually shape the US dollar movement as well. So that will be uncovered as we move along our daily dose of market insights in this entire week. All right, so for now, we know that the dollar weakness has been held behind, and potentially on the intraday basis, we may start to see some form of dollar strength extending further after it managed to survive last week, right exactly at after a breakdown on a daily basis, but on a weekly basis, it managed to close above the key long-term circular support at 97.3 on the US dollar index. So this is a US dollar index as shown on your screen over here. All right. And also I want to mention that this particular US dollar index, why is it facing the risk of this squeeze, or I call it profit taking for this earlier US dollar shorts, index shorts over here. So that means those guys who has a bearish position, why there is an unwinding of this bearish position on the US dollar index is particularly also due to the futures market positioning as well. So for the futures market positioning, I tend to watch the commitment of traders index report. So this report tends to be slightly lagging. It's not live, so they will release it on a weekly basis. So the latest one is as of the week of 16th of September over here. That means it was last Tuesday report. So last Tuesday report over here, when they release it, it shows that the this particular net short position on the large speculator. So we know that there's a lot of participants in the futures market. There will be speculators and commercials, hedgers. So what this micro database provider, they did a net position by minusing off the large non-commercial speculator, minus off the large commercial hedger position. So it becomes a net position. All right. So if this position is in negative over here, based on last latest report of 16th of September, is at negative 26.428 contracts. That means there is a net short position of negative 26,428. So primarily speaking, saying that this negative position is more skewed towards position by large speculators rather than commercial hedgers. And this position over here of negative 26,428 contracts open, that means net short open contracts, is now approaching close to a 5-year low over here. So because it's fast approaching a 5-year low, this is a contrarian opinion indicator. So once it hit various significant low level, there could be a risk of the opposite taking shape. That means unwinding of this significantly large net open short position in the US dollar index futures contract. So that actually explains why the US dollar weakness last week managed to see that sharp uptick rebound right after the FOMC exposed FOMC meeting and exposed Fed chair press conference. All right, over here. So with that, now let's now straight away jump straight into the second segment of today's daily dose, which is my intraday technical outlook segment over here. So let me expand my screen. All right, so that you guys can have a better view of the charts. Okay, so let's start with the euro dollar first. Okay, so the euro dollar on last Friday broke below our pivotal support that I mentioned earlier on Thursday, which is 117.90, 117.70. So skewing towards a extension of this ongoing minor corrective decline sequence after hitting the 4-year high at 119.10 during the onset of the FOMC outcome and the release of its monetary policy statement. So right now, potentially is doing this mean reversion decline over here, or extension of this ongoing minor corrective decline sequence, exposing the next near-term support level at 117 figure followed by 117.75, which is also the 50-day moving average. So for today, we will flip to a intraday bearish bias in any bounces below the short-term pivotal support zone at 117.70, 117.90, for the next near-term support level to come in at 117 figure, 116.75. So once it approach this 117 figure, 116.75, I'll be on the lookout for bullish reversal candlestick to flip my bias back to the bullish stances again. All right, so for now is potentially undergoing this another round of we call it leg of this extension of this minor corrective decline sequence that is still ongoing in play. Only a bullish breakout above 117.90 short-term pivotal resistance level that will invalidate the bearish bias for today to revive back to the for the bulls to at least seek out a retest at this intermediate resistance level at 118.60, where the bulls got rejected during the onset of the FOMC meeting and outcome. All right, so that's for the euro dollar. Up next will be the sterling pound over here. So the sterling pound against the dollar also broke below our pivotal support level and also broke below the 20-day moving average. So right now we will flip to a bearish bias stance for this extension of this minor corrective decline sequence to unfold further. So first support level to watch out for today will be 135. 134.50 over here, using 135.35 as my short-term pivotal resistance for this bearish bias that we have for today. A breakdown below 134.50 will expose the next near-term support level, which is very crucial, at 133.95, which is also the minor medium-term ascending trend line that I drew from the low of 13th of January this year, 2025 low, and as well as the former minor swing high area of 2nd of September and 3rd of September now turns into a pullback support area. Only a bullish breakout above 135.35 will invalidate today's bearish bias on the sterling dollar to see the revival of the bulls to seek out a test in first step at 135.95. A breakout above 135.95 will see a retest on the 36.80, which is the former congestion area of 20, which is the congestion area of 27th of June and 4th of July 2025 that got rejected after where the bulls can't maintain their bullish momentum right on the onset of the FOMC meeting and the release of the monetary policy statement, and thereafter the momentum starts to dissipate after Fed Chair less dovish press conference. So that's for the sterling dollar. Next up with Aussie dollar. So the Aussie dollar also faced a similar fifth as well, broke down below our pivotal support level, which is at this 66 figure level, and also broke down below the lower boundary of this minor ascending channel support that was previously in place since 22nd of August 2025 low. So right now over here is also potentially doing this extension of this minor corrective decline sequence that is unfolding, heading down towards the next support zone at 65.70, 65.70, 65.55, maximum 65.30, with a confluence with the 50-day moving average as well. So for today, I'll be using 66.20 as my short-term pivotal resistance level to have flipped to a bearish bias in any bounces for this minor corrective decline sequence to extend further towards the downside, right, towards the said support area that I mentioned earlier on. However, only a bullish breakout above 66.20 that would invalidate today's bearish bias view on the Aussie dollar to see a revival again back for the bulls to revisit this key resistance zone at 66.80, 67 figure level that got rejected during the onset of the FOMC meeting on last Wednesday. Right, so that's for the Aussie dollar. Next up will be the dollar yen that continues to remain rather choppy. So on last Friday, we do have a bearish bias over here, or last week, I would say last Thursday, but the bearish bias so managed to held exactly at the 20-day moving average, which is our first support level at 47.50, before staging a bounce ex-post BOJ meeting and ex-post BOJ press conference at the 2:30 p.m. hour during the last Friday, where BOJ governor spoke at 2:30 p.m. Singapore time last Friday. So since then, it managed to stage a bounce, but so far still remains below the key 200-day moving average, where the bulls has been in check since the last test of it on 3rd of September, and also our pivotal resistance area at 148.75 and 148.95. So this still remains our short-term pivotal resistance zone. So still maintain that bearish bias for it. But however, first support level to watch remains the same at 47.50. Only a breakdown below 47.50 will allow it to float down towards the lower limit of this minor sideways range configuration that has been in place since 5th of August, which is at 46.10, followed by the all-important 45.95, which is the right now the medium-term ascending which range support that has been in play since the 22nd of April 2025 low. Only a bullish breakout above 148.95 will invalidate today's bearish bias view within this minor sideways range configuration to see a squeeze up to test the medium-term pivotal resistance level at 149.70, 149.90. So that's for the dollar yen. Next up, we proceed to the intraday technical outlook on the major stock indices, starting with the Hong Kong 33, which is representing the Hang Seng Index. So for the Hong Kong 33, it plunges below our Titan short-term pivotal support that we have earlier on at around this 26,520 level. So for now, price action now managed to stall at the medium term minor swing low area of 12th of September. So for today, we will flip to a neutrality stance on the Hong Kong 33. So neutral between last Friday US session high, which is 26,650, which has now become a minor range support that has kept the bulls in check since last Thursday, 18th of September Asia session over here. So 26,650 and 26,275 will be my neutrality zone to keep a lookout for. Only a bullish breakout above 26,650 will allow the bulls to take a upper hold again to revisit 26,940, 27,125, 27,285 in the first step. However, if we start to see a bearish breakdown below 26,275, then this minor corrective decline will extend further towards the downside to see a mean reversion decline scenario unfolding to expose the next near-term support level at 26,060, followed by 25,860, which is the rising 20-day moving average. So one price action hit around this zone over here, 26,060, 25,860. I'll be on the lookout for a bullish reversal candlestick to flip that biasness back into the bullish side of the story again, given that the price action of the Hong Kong 33 is still trading above the 50-day moving average and the 20-day moving average over here. So that's for the Hong Kong 33. Next up will be the Japan 225 that represents the Nikkei 225. So the Japan 225 managed to stage a bullish reversal candlestick right exactly at the 45,000 short-term pivotal support level that we highlighted earlier on last Thursday, and shape a bullish reversal price action movement right now, and it's fast approaching our first resistance zone that we highlighted earlier at 45,960, 46,220. So for now, pivotal support still remains the same unless we have a bullish breakout above 45,000, 46,220. Then I would tighten my pivotal support level to this area, to this level here. Okay, at 45,340. All right, so pivotal support level remains the same, 45,100 level, 45,000 level. Next resistance level to watch will be at 46,430 / 46,580 to in this ongoing bullish bias view that we have. However, breakdown below 45,000 short-term pivotal support level will invalidate today's bullish bias view to see another round of minor corrective decline unfolding, testing the next intermediate support level at 44,560, followed by 44,050 as it's retraced back towards the rising 20-day moving average, now acting as an intermediate support at 43,580. So that's for the Japan 225. Next up will be the Germany 30. So the Germany 30 managed to bounce on last Thursday and last Friday and surpass our pivotal resistance level at around the 23,560 mark. Initially, we wanted it to float down lower to test this 23,180 level, which is the minor swing low area of 20th of June, followed by the low of the 19th of June, which is also the lowest point of this complex sideways range configuration that has been taking shape since the fresh all-time high on 10th of July this year. All right, it has been evolving this complex sideways range resistance. But however, it didn't actually float down as expected and surpass our short-term pivotal resistance level that we have on last Thursday. So indicating that the short-term bearish momentum has started to ease off over here. So what we could see over here is that potentially it may float back up towards this minor swing high area of 5th of September and 10th of September again, at least on a very short-term intraday basis. All right, so with that, we will flip to a bullish bias for today, and also given the fact that the hourly RSI previously has managed to shape a bullish divergence over here. All right, and so far it hasn't reached the overbought level yet. Okay, it hasn't hit the overbought level yet, so potentially there could still be a bit of intraday push up to actually take shape for the Germany 30 within this sideways range configuration. So with that, I will have a pivotal support level to watch out for today at 23,490. So 23,490 will be my short-term pivotal support level. First resistance to look out for will be the level that got rejected on last Friday, which is now the downward sloping 20-day moving average, which is now at 23,790. Push up above 23,790 will revisit this significant minor swing high area of 5th of September and 10th of September at 23,900 for the Germany 30. Only a bearish breakdown below 23,490 will invalidate today's bullish push-up view on the Germany 30 to seek out last week minor swing low area again at 23,390 / 23,310. A breakdown below it will flip the bias back to the best to retest the minor swing low area of 20th of June and 23rd of June at 23,180. So that's for the Germany 30. Next up will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 push up as expected, hit our first resistance level at this 46,365, 46,400 level. And also if we see the RSI continues to shape a higher low over here and also starts to turn up right above the 50 level mark, indicating that the short-term intraday bullish momentum still remains intact. So for today, we will have a slightly adjusted upward pivotal support level to bring it up in line with this ongoing minor ascending channel that is still in play for the US Wall Street 30, now acting as also the key short-term support level at 45,955. All right, give me a minute. 955. Okay, so we will have a adjusted pivotal support here, and also this adjusted pivotal support at 45,955 is very important. Previously minor swing high area of 15th of September, 16th of September, bullish breakout exposed FOMC managed to do a intraday sell-off, but this intraday sell-off didn't have an hourly close during the 3 a.m. mark. So this 3 a.m. mark is on Thursday, is right Fed chair press conference, and managed to survive all it, and thereafter continues to bounce up higher. All right, so this is for sure a very important psychological level for the bulls in order to maintain its ongoing ongoing short-term minor bullish impulsive up move sequence going forward for today. All right, so this will be my Titan short-term pivot support level 45,955. All right, so let me put it in writing for you guys. All right, so then this will be no longer my pivotal support. All right. Okay, so let me adjust it. Okay, so for the US Wall Street 30, maintain that bullish bias, but with a tightened adjusted pivotal support for today at 45,955, which I explained earlier how I derived this level. Next intermediate resistance level to watch will be at 46,570, 46,750, which is a bunch of Fibo extension cluster level. Only a bearish breakdown below 45,955 will negate today's bullish bias view to see another round of minor corrective decline sequence unfolding, retesting the rising 20-day moving average, which now confluence with the former minor bullish ascending triangle range resistance, now turns into a critical pullback support area where the ex-post Fed chair press conference, the bulls managed to survive at this area as well before staging that last bullish movement up on Thursday and Friday. That will be 45,780, 45,690. Next up will be the S&P 500, which is continues to print fresh all-time high on last Friday over here. So almost approaching our second resistance level that we have, 6,680, 6,690. So this will be my first support level to watch out for today in any form of the pullback, 6,660. So I will tighten my pivotal support for today at 6,620 to maintain that bullish bias. Above 6,690 exposes the next intermediate resistance zone at 6,730, 6,745, which is a bunch of Fibo extension cluster level. Only a bearish breakdown below 6,620 will invalidate today's bullish bias view to see another round of minor corrective decline sequence unfolding, revisiting 6,580 and even 6,550 next in the first step. Next up will be the Nasdaq 100. So Nasdaq 100 also going to print fresh all-time high, hitting our second resistance level, 24,695, 24,770. So this level here will be my first support level to watch in any minor pullback for today, which is at 24,530. So for today, I will tighten my pivotal support level slightly upwards towards 24,000 to 24,305. We also confluence with the minor ascending channel support that I drew from the low of 2nd of September. So still maintain that bullish bias on the Nasdaq 100. After 24,770, the next resistance level to watch will be 24,890, which is the 0.618 Fibo extension on this ongoing bullish impulsive upmove sequence on the minor time scale that is still in place since 3rd of September, and also the upper boundary of this minor ascending channel. However, a bearish breakdown below 24,305 will negate today's bullish bias view to see a deeper minor corrective decline sequence unfolding, exposing the next near-term support level at 24,140, 24,050. If this zone can't hold, you may see a further extension downwards to retest the rising 20-day moving average, confluencing at 23,850, 23,755 zone over here. So that's for the Nasdaq 100 and also the intraday technical outlook of all the major stock indices that we cover on a frequent basis. Now, to the commodities market, let's start with Gold XAU/USD. So Gold, still recall that on last Friday, this is my chart of the day. Why? Because it is exactly forming a minor bottoming reversal formation, right exactly at our pivotal support zone that we highlighted on last Friday, 3,644, 3,620, and indeed it bounced out expected and hit our upside trigger level right now at this 3,688 level. It's playing around this level, but didn't have a clear bullish hourly close above it yet. So pivotal support still remains the same unless we have a clear bullish breakout and hourly close above 3,688. Then I will tighten my pivotal support level towards 3,660 for today, this level over here. So for now, pivotal support short term still remains the same. 3,644, 3,620 level. Hourly RSI continues to shape a series of higher low, hasn't hit the overbought level yet, so indicating that short-term bullish momentum still remains intact. So for the next resistance level to watch in this ongoing bullish bias view on the Gold XAU/USD will be 3,725, followed by 3,750, which is a Fibo extension cluster level. Only a sudden bearish reversal and a breakdown below 3,620 will invalidate today's bullish bias / ongoing recovery view of this Gold XAU/USD to see another round of minor corrective decline sequence unfolding, exposing the next near-term support level at 3,560, which will correspond to the rising 20-day moving average as of now. So that's for Gold XAU/USD, still maintaining that ongoing bullish bias as we foresee that last week minor corrective decline from the fresh all-time high of 16th of September is more or less has really reached a dipping bullish reversal point on last Friday. Next up will be, lastly, will be West Texas crude oil. So West Texas crude oil bounced down as expected, revert down as expected in our bearish bias view, but can't manage to break below our first support level at 62.70 where we highlighted earlier. So given that it has not broken below 62.70, I do not want to tighten my pivotal resistance to be 64.10 to be so tight. So unless it has a bearish breakdown below 62.70 and hourly close below it, then the pivotal resistance level in short term will be tightened towards 64.10. So for now, pivotal resistance in short term still remains at 65.30, which confluence with the downward sloping 50-day moving average to maintain this bearish bias on West Texas oil. Next support level to watch will be the all-important minor range support level that has been in place since 5th of September low, which is 61.85. Only a breakdown below 61.85 will unfold a much more pronounced weakness on the West Texas oil to expose the 2nd of June 2025 gap support level, which is at 61.30. All right, only a bullish breakout above 65.30 will invalidate today's bearish buyer's view to see a squeeze up towards 66 figure level and even 66.90, which is slightly below the key 200-day moving average over here. So 66.90 is the is the minor swing high area of 6th of August. So that's for West Texas oil. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So for now, just earlier, a while ago at 9:15 a.m., the China PBOC central bank maintain its loan prime rate for the 1 year and 5 year to be at 3% and 3.5%, no change. So going forward, today's key data to look out for at events will be at 8:30 p.m. Singapore time, which is a Bank of England official Phil speaking. So this potential speech could influence the sterling dollar and the sterling crosses. And thereafter, we have 9:45 p.m. Fed Williams speech as well. So that could influence the US dollar movement, the major US dollar movement pair. And going forward over here at 10 p.m. Singapore time, you have the Eurozone consumer confidence flash data for the month of September. So market participants are expecting almost a same magnitude of decline. Previous month of August is declined by negative 15.5, almost the same at negative 15.4. So this potential release of consumer confidence flash for Eurozone for the month of September could influence the Euro crosses, the Euro dollar, and as well as the Germany 30 CFD index. And 10 p.m. we have another Fed official speaking, Fed Muslim, and followed by another slew of Federal Reserve officials speaking at 12 a.m. Singapore time. 3 of them back in hammock, and most importantly, Fed Miran, which is very dovish, where he called for a 50 basis point cut in the last Wednesday FOMC meeting. And this Fed Miran is considered as part of Trump advocate to actually push for the US Federal Reserve to be much more dovish than what the current stance is to be. All right, so that sum up today's Daily Dose of Market Insights. I'm Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.